Hi class. So today we'll be talking about chapter 8, the financial systems. So our agenda for this day is to define the financial system and link it to economic growth, to explain the roles of financial institutions, its assets, and the key players. Also, we will evaluate the financial system's contribution to the development and give you some practical examples um, in the eyes of a financial planner and labor professional, and also to answer some of your questions. So, in order to get an overview or to study finance in an economic perspective, we need to see the role of money. So, in modern economies, we always rely on cash and near cash items for efficiency and moving beyond the limitations of a barter system. So there are three roles of money that is it's used as a medium of exchange because it's generally accepted as payment for goods and services. Also, it stores value. It can hold value over time, allowing for saving, like the coins, the bills that we have. And it's a unit of account. It provides a standard measurement for the value of goods and services and also debts. So the key concepts that we will be talking about when in relation to the role of money is it's a legal tender. So by law, money must be accepted for payment of a debt, or it could be used to save uh, money in the bank. So in a digital world, because we're living in a digital world, money now moves electronically. So through the digital payments, even crypto, and we also have a Bitcoin. So let's go now to what is a financial system. So financial system is a network of institutions, markets, contracts, and intermediaries that work together to channel funds for those who have surplus money, just like the lenders and the savers, to those who needs funds. So who are those? Those are the borrowers and the spenders. So think of it as a circulatory system of an economy. So just as blood, like for humans, blood carries oxygen and nutrients throughout the body. So the financial system carries money and capital throughout the economy to where it's needed most. So there are two main players discussed in the book: the lenders, which refers to the individual or entities with surplus funds who believe their money can grow in the future. So they supply funds to the system, just like depositors in a bank, or the borrowers. So the lenders and the borrowers are the spenders. So this can be entities with deficit of funds, or it could be an individual, which they demand funds for various purposes. So for households, to buy a house or a car, for firms or businesses, for capital or investment or expansion, and as well as the governments to finance public spending or infrastructure, building infrastructure, roads, or in trade development. So those are the two main players of um, in a financial system in the Philippines. So there are also three main exchange mechanisms or markets. That is the banking system, which connects depositors or the lenders with loan seekers or the borrowers. So we have the bond market, where governments and corporations issues bonds to borrow money from investors. So just like promising to pay a regular payments with interest. And also we have stock market, a marketplace where ownership in companies in form of shares or stocks is bought and sold. So this allows companies to raise funds by selling ownership stakes. But this is and the market is it really fluctuates, no? And it's not really a reliable metrics for overall economic well-being. So the stock market we have the Philippine stock market, of course. So it's where a publicly traded companies sell, bought their stocks, so or trade stocks. Let's go now to the financial institutions and assets. So when you say financial institutions and the financial assets, we can see um, in our financial system that there are, because we're talking about funds here and we are talking about institutions or intermediaries, there's always an investment. So there's always an investment, there's always an investor. So it's committing funds to one or more assets with the goal of increasing wealth. So if you have a surplus fund, you can always invest to banks or investment banks or even businesses or even in the stock or bond market, and also with um, you can also let the government borrow funds to you through the bonds. So there's also savings. So the portion of wealth not consumed and available for another for available to fund another's investment. So this is basically the role of the bank, like because we deposit our money that is our surplus or even just a savings, no, and then the bank will initiate funds. So those who are looking for funds, so they are made available to the lenders or to the borrowers or to the spenders. And we also have financial assets. It's a liquid intangible asset whose value is derived from a contractual claim. So it's someone else's liability, no? So for example, stocks, bonds, bank deposits, no? So they are manufactured by institutions and are affected by inflation. So real asset, on the other hand, is a tangible asset with intrinsic value. So some of the examples are the commodities, the land, buildings, machinery, and even jewelry. So uh, because our financial systems involves investments, we have what we call investment assets. So these are um, categorized as five primary classes: the stocks, the bonds, the currencies, which is money in different denominations traded in foreign exchange markets, and the real estate, no, the land, the buildings, which is real assets, and the commodities, which is also a real asset. So these are the physical goods like gold, silver, oil, or agricultural products. So those are the investment assets or classes. So we have also financial markets and instruments. No, we have the money market where short-term financial instruments maturing less than 1 year are traded. No, so we have certificate of deposits. What else? We have checks. No, we have bank bank deposits or mutual funds. And we also have capital market where long-term financial instruments, which is maturing in more than 1 year, are traded. And this includes stocks and bonds. So the financial derivatives are those instruments whose values are derived from the value of an underlying asset, like a stock option derives its value from the stock price. So in the Philippines, we don't really, it's not really a common practice or um, a market instrument no being used in the Philippines. So it's widely used outside, especially for bigger companies. So we have here the definition. Now, the money is the coins or the currency used as a trading medium. Cash is a money on hand. The debentures are a type of long-term bond which of often are unsecured, no, issued by company. So, question class, true or false? All money is currency, but not all currency is money. Uh, I'll state it once more. All money is currency, but not all currency is money. No, so you answer that one. It might be asked in the final exam. So we also have an investment management process. So since one of the biggest source of cash or funds in the financial system is coming from investments, no, because um, people are investing, especially if they have excess funds, not just the people in the Philippines, but also from foreign investors. If they see that we have, they can invest here in the Philippines or in our market, then they would really invest, and that would include a large sum of funds or money. So, portfolio management is the art and science of building a collection of assets. So, you have, as an investor, you have a portfolio management and also an asset allocation where you decide how to split the portfolio among different asset classes. So we have already identified the asset classes like the stocks, the bonds, the real estates, no? So it's like a personal portfolio where you, for example, I'm a graphic artist and I have a portfolio. So I would classify it as posters for t-shirts, designs for um, bags, designs for tarps or posters, or designs for cards. So that's my portfolio. No, so the investors also have different construction decision and how their portfolio appears. So we have here the top-down approach. So allocate assets by country or region and asset type, and then select the specific investment within those categories. Well, the bottom-up approach focuses on analyzing and investing in specific companies regardless of the broader economic context. So the bottom-up approach is that you will identify first the companies that, if I'm an investor, I would identify first the company where I'd like to invest. Like for example, I'm a foreign national and I'm looking for companies that I'd like to invest. So I will zero in to Sipalco. So I will analyze, I will uh, search, or make my research about Sipalco, how is it doing, or its financial condition and financial status. So that's the bottom-up approach, regardless of the economic situation here in Cagayan de Oro or in the Philippines as 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 a whole. So while the top-down approach is that you analyze first the you look first at the economic condition, and then you identify what a market you should go into, or what specific market, and then if you have the market, if you have um, specific investment that you'd like to invest in that market, like for example stock market, then you will then choose which company you would like to buy stocks, no? So it's like that. So from the top down, from the broader perspective, I mean broader market, which is the economic condition or economic status, down to the specific categories or specific company. So that's a construction decision. So the key aspects of investment management is really to channel funds through intermediaries. So it also transfers and schedule risks, because there's always risk when you transact using you transact no um, that involve any transactions that involves cash. So managing ownership of funds, separating ownership from the management, and we also have corporate governance. So we have a system of rules, practices, and processes by which a company is directed and controlled. So that's also part of investment management, you where each of the companies have their own corporate governance and how they would accept or how they would borrow funds or how they would accept investors from foreign or national um, category. So we have also key players. I've already discussed this one. To be specific, we have the firm, the household, the government, the financial intermediaries. So intermediaries means they are the middlemen, no? So they position themselves between debtors and creditors, and they facilitate the flow of funds. And one financial intermediary is the bank. So let's go now to the how financial systems affects our economic development. What are the different aspects or different uh, areas that it affects or pathways that would help us or help the economy to develop? So first one is that, of course, it flourish savings and investment relationship. So a vibrant financial system provides a safe and accessible facilities for individual and firms to save. So if we have a we have always access to banks, no, where we can save, where we can borrow. So an increased savings create a larger pool of funds for loans. So if we have a lot of investors, a lot of people who wants to save, then the banks can always process funds that would be available for loans or for borrowers to borrow. So we also have um, development on labor and employment. So the direct effect is that if more manufacturing and service companies can access working capital or allowing them to borrow funds or have access and funds to expand or to build businesses, then there would be more uh, opportunities for laborers to get hired. So the direct effect is that financial institutions themselves, like the banks or the fund investments or investment companies, will also hire more staff, and that would also increase the uh, employment rate of the nation. So third is growth in capital and securities market. So as I've said, the capital markets, the money markets, and the foreign exchange market will also continue to grow and will have more opportunities to invest because the flow of fund is circulating in our financial system, in our economy. So if these areas grows, then more likely our economy will grow, will continue to grow. So because transactions are being done here, and not just here, but also in like the foreign exchange markets, no, it facilitate international trade by helping companies, like foreign currencies and manage their foreign exchange requirements. So next is the role of regulation. Aside from the corporate governance that is made available by the companies nor industries or firms, we also have regulations to oversee or overlook the overall financial systems developed in our nation. So we have the RA 3765, which is the Truth in Lending Act. This requires disclosure of financial charges, protecting borrowers, and promoting transparency. So as you can see and as you've observed, all the banks or the credit cards, the bank issuing credit cards will always have the transparency when it comes to charging penalties, interest and charges, or even cancellation of cards. No, so all of those different kinds of charges are being disclosed, or you are or it is being made available in their websites, in the notes that they will be sending you, or letters that they will be sending you when you activate or receive your cards. We also have 6426, that is a Foreign Currency Deposit Act. So that one institutionalized a foreign currency deposit, no, which helps attract and manage foreign funds. So it's not just here in the Philippines, but also from funds coming from outside the country. So next is for the trade and development. So in the financial system enables trade, no, through payment systems, letters of credit, and foreign exchange markets. So in effect, this facilitate commerce. So the export and imports can transact confidently across borders, connecting domestic producers to global markets and expanding economic opportunities. So when that happens, then there's a trade development. So our way of trading to foreign nationals or foreign markets are improving because we are also adapting our learning from how they transact, or how they put policies um, on their financial systems, no, or economic transactions. Next is the infrastructure and technology development. So as I've said, if there are more funds coming in our financial system, in our economy, government and corporations uses this to raise funds for roads, bridges, power plants, and telecommunications. So if all of those things will exist, no, there's always infrastructure and technology development. So venture capital and development finance institutions fund technology adoption and innovation, thus driving productivity gains. So if we are doing well with our funds, then companies can move, government can move, and it will allow them to build infrastructures that would be helpful in companies, or even in doing trade, no, or commerce inside the country. There would be a safe and easy way to transact or to trade. So, in effect, financial system helps building infrastructure and technology development. So it also uphold fiscal policy. I mean, government effectiveness. So if we have a developed financial system, it will allow the government to implement fiscal policy effectively. So through bond markets, government borrows for public investment without disrupting private credit markets. So if there's enough funds where in the bond market where government can borrow money to supply, for our I mean for public investments, then that would create um, effectiveness sa ato ang government. So central banks like the Bangko Sentral use financial institutions to transmit monetary policy throughout the economy. So any monetary policy that our government uh, would like to transmit is through the BSP. So we have, from time to time, we have policies like the insurance, bank insurance, or we have a deposit insurance. We also have the insurance itself, and we also have different policies on how we transact the bank mitigating risk of any theft or um, bank crimes, no? So just like um, money laundering na mga cases. So it also attract foreign investments. So global capital flows. If there's a strong financial system in the country with transparent rules and stable um, institutions for foreign direct investments and portfolio management, international investors are attracted to invest in our country. So, mao po na siya. So far, the Philippines have direct foreign investors also. So, but I can't say that we have really a well-developed financial system, but so far we are improving. So it also fosters economic integration. So not just for a certain um, city, region, but also nationwide and even abroad. So we're able to connect, no, even transact uh, to other countries or ASEAN or European Union where integrated financial markets boost collective development. So we are members of the ASEAN countries, so that would also enhance and also expose us to opportunities to develop our financial system. And we also have balanced regional development. So this reduces disparities. If our financial system is capable and able to channel the funds, from developing regions like here in Mindanao, then we can safely and we can comfortably receive the funds, without any complications. So that would allow our our city to also to continue to work on our development, or even the any projects that we have. And lastly, to sustain macroeconomic balance. So stability for growth. So when we have a well-regulated financial system, this contributes to a stable prices, stable debt levels, and resilient economies. So when you say stable debt levels, we are regulating, or we are ensuring that everyone who borrows or have debts can also pay, are able to pay, and we are resilient to any changes. Just like when there's a war going on, no? Like, and the policies, the fiscal policies are in place when it comes to prices, when it comes to prices of goods, no? So na siya stability, and they absorb shocks rather than amplifying them. So this creates a predictable environment essential for long-term development planning. So that's the important role of financial system. If we have a strong, balanced, vibrant financial system, then that would lead us to a more pathways to economic development. So here's a practical application on using our of what we've discussed now about financial systems. You can see it in your book at the last portion. It's analyzing stock data. So you have here statistical measures for returns. So we have the average return, the variance of return, and the standard deviation of return. So I will not be requiring you to memorize this one, but at least you will have an appreciation of what its uses, how you use it to analyze stock data. So when you go to stocks, there are many things that you need to study and you need to analyze, especially data, from businesses, or even current events, news of what is going on, even political issues from outside outside the Philippines. So a work example and hypothesis is to analyze the stock price data for McD Foods Corporation and Macmillan Corporation. So this is during the pandemic. So there are calculations. The first one is to calculate the period returns. So you have there the formula that calculate the average return, the variance, and the standard deviation. So let's go now to the result. So the hypothesis on Macmillan Real Estate Company during COVID-19 or during pandemic computed rather an average return of a negative average return, and the standard deviation is relatively high. So it shows that during the pandemic and the subsequent lockdowns, created a significant economic uncertainty. So that is why its average return is negative, because the economic condition is very uncertain, very um, unstable. So for a real estate company, this likely meant a drop in demand, and a halt in construction activity. So the negative average return reflects the downturn, while the high average deviation reflects the market's volatile reaction to rapid changing news and government policies during the months of crisis. So there, as you can see, based on the hypothesis, there's always impact, or there's always a significant impact on the economic condition of the country to the stocks being traded in the stock market. Or dili lang nationally but globally, no? So, manay siya. So, to end chapter 8, let's remember what Indra Nooyi, the former chairperson CEO of Pepsi Company, he said that he, we must change the dialogue from what we do with the money we make to how we make the money. So in other words, let's always remember, let's always make use or see in a perspective that when we have money, we we should not always think of it on how to spend it, but we must always think on how we can even make more money. So investing or even uh, making use of the money that it will make more money. So let's go now to, so this is an example of Philippine money coins. So you're all familiar with that. So that's the end of chapter 8. So let's have a brief discussion of chapter 9, because this is somehow related to chapter 8. So finance and development. According to Robert Cox Merton, a Nobel Memorial Prize winner in economic science, he said that special fear of finance with an economic is the study of allocation and deployment of economic resources, both spatially and across time in an uncertain environment. So this highlights that finance is not just about money. So he uses the deployment and allocation of economic resources. When you say resources, it's not just money. It's about making strategic decisions about resources in the face of risk and time. So we are having money in an uncertain world. So how do we allocate, or how do we deploy money with a limited resources? Because we cannot say that we have unlimited money, no? So limited lang gid ang atong resources. So that's what finance is all about in our uncertain world. No, it's not just about money. So the primary role of finance is to link savers and investors. So basically, it's the same in the financial system. Financial institutions like the banks, stock markets, bank markets act as intermediaries, and they channel savings from households, firms, venture capitalists to to borrowers like entrepreneurs and firm needing capital for investment or for spending. So this process is fundamental to economic activity. So mao gina siya ang role sa finance, to channel the funds, no? Okay, so the five key roles of finance: to link savers and investors, to screen and monitor investments. And it's not just about where to invest, how to invest, but also to screen and monitor to evaluate if where should I invest, or is it worthy to invest in this company or in that market? No. So to smoothen consumption and also to manage risk, no. So we diversify. We don't just invest in the banks or save in the banks, but also we have insurance that are also offering mutual funds, investments, and insurance. And also we have cooperatives, no? So diversify, because that's one way how you manage risk, no? And manage payment systems. So it reduces transaction costs through technology because we are in a digitalized world. So naanata sa Industrial 4.0, no? Sige. So finance is a tool for equity because it's considered essential for sustainable economic growth in emerging market. So studies suggest that while financial development can initially increase income inequality, it eventually helps reduce it as more people gain access to financial services. So if more people can save in the banks and can gain through their savings, interest through their savings, then it would eventually reduce inequality, income inequality. So it's a long-term mechanism for more equitable growth. So when you say long-term, it's not just for 1 month, no, but it reduces income inequality of the people, or for a period of time, no? Sige. So the critical role of trust and law, this is very essential to generate trust, especially when it's directly affecting borrowing and lending, no? So a sound legal system. So that is why there are many laws being passed, no? As I've said kaganina, the Truth in Lending Act, and even the foreign currency, foreign deposit act, no? So we have there we also have an anti-money laundering act or law also being passed, that is to protect our borrowers and our lenders, and also for the savers itself, no? So if we have insecure property rights and weak protection, then most of our investors will not invest, no, because of that, and it would encourage, actually um, discourage investment. Sige. So an effective corporate governance ensures company directors are accountable to stockholders or shareholders, fostering confidence. So also not just the government to our nation, but also to every corporate companies. You know. So the Philippine corporate governance highlights board independence. It has shareholder rights, and it has a comply or explain approach. So it's all written in the bylaws, no, of a corporation. So for those, you can see that in the SEC reports, or the Securities and Exchange Commission. Also there's also reports for sole proprietorship and even partnership in DTI. So let's take a look at microfinance. So when we are looking at the broader aspect of finance, we also have a microfinance, which range of financial products designed for low income individuals who are typically excluded from the traditional banks. So some of the banks here offers microfinancing, and these individuals are seen as unbankable due to perceived high risk, small transaction sizes, and lack of collateral or even no collateral. So who needs microfinance? The poor that has low, irregular, and unpredictable income. So they are limited to options like family and friends, money lenders, or credit, informal savings group. And the good thing is that microfinance provides a reliable and formal alternative for these individuals. So it's a loans for the poor. So a core component of microfinance is to provide small loans without requiring traditional collateral. So a small loan siya, no collateral required, can be done one time or recurring, or can be a repeat transaction. And interest rates can relatively be high to cover administrative costs, but responsible lenders ensure borrowers can repay. Sige, so that's all. Thank you and God bless on your exam week. See you pa next week, class. Bye.